Right, so sounds like it's all on in Russia and Ukraine. So this is one of the reasons why the futures is the real market. The cash market is the part-time market. Right? I'm just writing that because there is a complete plonker who's out there. Actually, there's more than one, right? And they keep saying the futures market is the fake market, right? These markets trade 24 hours a day, right? Do you think, I said it a couple of weeks or a couple of days ago, a week ago, I said, do you think Russia's going to wait until the US cash market opens up before he does something? I don't think so, right? So it's 6 a.m. Russian time, so it's like 40 minutes ago, 2 o'clock Australian time. All the US is asleep, right? They're all asleep, right? And it was always going to be that way. This is what happened, right? You can see it here, right? Basically, Putin, the Russian state television said, mate, Putin's going to do whatever he wants, which we all kind of knew anyway, right? But this is the trigger. So the big question is, what do you do, right? If you've got positions. If you've got positions, right, and you haven't set core levels, overnight core levels at the moment, you've got rocks in your head, and by the time you're listening to this video, it's probably too late. Always leave core levels, particularly in times like this if you've got overnight positions. If you don't have a futures account and you're running overnight positions, then you've got rocks in your head, right? Because this stuff happens outside of the hours in which you can trade the cash market. You need a way to mitigate your risk. And for me, when I opened my futures account like 30 years ago, right, I opened it because for that very reason, I thought, mate, if I get stuck outside of cash trading hours, I need to be able to do something with my risk, and futures is it. Okay, end of rant, right? So this is what happens. So if you've got a position and you're not short equities or square equities already, you're long equities. Look, really, you're lucking out badly, right? As I think I said the other day, I had a tiny gold position. It's like one micro contract, right? So that's like 10 ounces, right? I got out of that. I dropped like $400, I think. It's kind of whatever. I spill out on a Friday night. so that's it. I had a bund position. I'm out of that. So you can see bonds are spiked, gold spiked, equities crashed. Shitcoin. This is the classic geopolitical play, right? Bonds rally, gold rallies, specky stuff dumps. Now, the danger that we will have, particularly when the US opens, right, is if this changes to a liquidation event as opposed to just a risk-off thing, okay? Now, one thing I'm going to show you, see where the Aussie market is now, right, compared to the low back in January, right? It's still like 4%, or it was actually like 6% higher, okay? Before it broke down. You'll see in a minute the US market was sitting on its haunches, right? Now, one of the reasons why the Australian market was still up there, different mix of stocks, of course, right? But back here, it had like this time here, middle of the day, right? It was a very big liquidation event, right? It just cleaned out a whole lot of people, and this is where I went long the the Aussie SPY. I'm square now. I sold some of it here, or I sold some at 60.74. Sorry, 70.74, like in here. I sold some of it at 71.74, and I just sold some of it this morning before this news came out, about 70.50, something like that. So I've made, basically, several hundred points on each of the contracts. I did a few contracts, so I made good money on that move, and I was long them and short the S&P because I wanted to play that spread, and that worked out really well for me. So this obviously rallied, and when we look at the S&P here, before it broke down, right, it was sitting on its haunches, right, whereas the Aussie market, as I said before, was up like 5%, right? It was back up kind of here, right? Very good outperformance of the Aussie market versus the S&P. So I'm short the S&P. I added more to it a few days ago. Added more to it now. I'm not limit short on the S&P, but I could add some more if I wanted to, but I think I'll probably just sit on what I've got at the moment. It's going pretty well. As I said, so the risk here is that this just doesn't become like a spike here, but it triggers some real stops, margin calls, and things like that, and that then leads to a liquidation event. Now, if it's a liquidation event, then the things you'll be looking for is things like gold selling off, right? You're looking at the bonds selling off. When those safe haven assets, when they start selling off, then you really know there's a liquidation event on your hands, and that is a time to pile on aggressively short. That's the way I trade them, and then you just watch it very carefully for it to show signs of exhaustion in the bottom, and then you turn it around. Very risky markets to trade. A lot of commentators you'll hear on YouTube will say, mate, with this volatility, get out. I'm the opposite. I thrive on volatility. I love it, and that's when I make money. When the markets aren't volatile, it's hard to make money. When they're volatile, that's when the real traders come out and they make a killing. You just see it in bank results, right? The bank I used to work for, Macquarie, whenever there's market volatility, they rake it in. And that's the difference between real traders and just like rank punters. Rank punters run away when there's vol. The real traders step up. Now, I guess the question is, where is it going to go to? This is as simple as I can make it, right? We can see it's broken this 4280 level, 4300, 4250, wherever you want to call it. It's a range in here. It's really broken down savagely. This is a Fibo extension. This is like a 1-to-1. This gap in here, as I said, I've had my eye on this for months, right, as a target. I think it's going to go there. 4,000, very, very solid chance that it's going to go there quickly. Now, I guess the other one, if we look at some of these Fibos, right? Okay. This one is an interesting one, the 50, okay? Down at 3,500. That, to me, looks like the next stop. And the reason for that is when we look at the price action here, look at that, right? That is the last big to and fro that we've really had. There's a bit of one in here, but nothing like the to and fro in there. And you can see that right is right on. That is right in the zone between the 50 and the 61, right in the guts of it. Right? So I think there's a very good chance that it will come down and it'll find support there. Right? If it gets there, there'll be buyers at 3.5 because there's plenty of sellers there. Right? And there's going to be people saying, well, I'm a buyer now. And when you look at this price action, this really was, one direction. And just as the enthusiastic money came in here without, in a way, relentless, right? It'll run for the exits very quickly. Now, I'm just going to add another couple of things to this Fibo. Yeah, look at that, hey? That to me, if we just look at from where it broke down, let's just line it up. I'm just lining up that breakdown point for that candle there, and this one at the top. Yeah, line it right on. Yeah, well, this one around 4,000. I think there's a 100% chance it's going there. And I think it will find some support there. There's a bit of a gap there, and it did have a bit of work in here. If that breaks, then really we are looking, somewhere around here, like 3,500. That's what I suspect. This is definitely like an A, B, C kind of wave forming for your Elliott guys, off the back of your off the back of the waves here, which is sort of like 1, 2, I don't know what you want to call it, 3, 4, I think that's the way you call it, 5. That's the waves, and there's a few reasons for calling those waves. The Fibonacci's kind of line up, I've done that in another video, but you can see here this wave 1 corresponds with, it's a very strong one, right? Wave 1s in Elliott waves are typically wave 3s are the strongest, right? But that's a big impulsive thing there. Up to wave 3 here, you probably see it not so much on the daily, but we might see it more on the weekly, maybe. Yeah, we can see it on the weekly here, right? So on the third wave, that's where it peaked. So the third wave is the strongest one, right? And you can see on the weekly momentum, RSI, that was the peak right on that wave 3, right? And then there's a bit of divergence, tiny bit of divergence here on the 5, right? So that is for the, for the Elliott guys, that is the wave count that they would be looking at, and as a result they'll be looking at an ABC following that, and that's very clearly an A, that's a B. There's a retracement in here of, like, I think it was 61, something like that. Yeah, bang on, right? 61 on the knocker. Therefore, they're looking at an extension. The extension will be at least a 1-to-1, which is their 4,000. So there's a few reasons why I think 4,000 is a natural point. The gap, the extension, they're the biggest ones, and I guess here there is there was a reasonable amount of choppiness in there, right? This is quite a risk though. 25% chance, right? Maybe 20%, not a huge probability. I'd say 100% chance. This one, 25, maybe 15, something like that. I think it's going to require something very pear-shaped to go on in Russia, not just something moderately pear-shaped. Now, the other reason why I think this is a good level is when we go out, where is it? I think when we look at actually the whole move from 2009, right? Oh, look at that. That's the 28, right? 3,800. Oh, look at that. Isn't that scary? That corresponds with the 38 retracement of that, right? So that's another good candidate, like 3,800. So put it this way, there's a whole lot of levels on the way down which would be very attractive for it to go to, and in a way that's a scary thing because there will be people targeting multiple levels in there, not just all grouping around the one. Look, that's about. Just the last thing I'll do is one of the scariest topping patterns that I have had experience with. Are these ones, which are the reverse symmetrical triangles or megaphones. I've had mine on this one for like a month or so. This is the NASDAQ 100, and they're scary because you've got a higher high, then a lower low, then a higher high, then a lower low. And what happens with these if they're bearish is you get a failure right on the midpoint. Right? Now that is right on the midpoint of this megaphone. And look at that. Holy cow, right? And it really is, right on the knocker, right, from those highs there. And it failed miserably. It had like 2 goes at it, right? That candle, this is like a day, that candle, and then this reversal here, that's an engulfing bullish, right, one in there. They are goddamn awful. And then you just look at the way it's failed since there, and it's still going. These are very scary topping patterns. I've seen like a few times before in various markets. I think I saw one in the .com, right? But they are bad news. This one isn't. I've seen ones that are better formed, but really what they indicate is there's just a lot of debate in the market in terms of like higher highs, lower lows. And if I go back to the S&P, one of the things that I've been very conscious of over The long term is the reverse triangle that was happening here, right? Let me just clean up that. And to me, what we're seeing now is probably the end of the breakout of that. This one I've always found very concerning, right? You know, very, very concerning. And one of the reasons why I was bearish the market right back here was because I saw this, you know, high, low, low, high, low, low, high. And I thought, mate, it is going back down here somewhere. That pattern is just highly disturbing in my mind, and you know, when you project it out, that's where it could come to. Let me just kind of clean this up, as my charting tool is a bit of a pain, right? You know, that is a quite a concerning pattern. There'll be a lot of people saying, what is it going to do here? It might have a bit of a bounce there, it might shoot through or whatever, but it is coming back to around that 4,000-ish level, and who knows where it is going to go from there. But anyway, so look, that's it. That's some thoughts on the market. Just thought I'd put that out given the news on Russia and the moves in the markets. So I'm still short the Australian 10s, 3s and the US 2-year bonds. I don't think I'm not so worried about the 2-year bonds in the US. I'm short the S&P. I'm out of my long Aussie share market versus the S&P. They've all done very well. On just the last one, shitcoin. You know, mate, very good chance it's going to 30,000, right? If it breaks 30, boom, right? Lower than that. If it breaks there, boom. And again, these patterns, they're everywhere. They're just absolutely everywhere. Bitcoin hasn't folded yet. But I guess the idea is just there was so much rapid enthusiasm here, right? And then people going, you know, playing past the parcel along here. When it breaks here, just as people ran into the room, people run out of the room, right? They run in, they play musical chairs, and then they run out, right? That's what's going. So keep an eye on this one. There is clearly a level through here at around about 35,000. That is providing some entertainment to yours truly. There, I'll put that in red. You know, if and when that breaks, and to me, it is clearly a matter of when. You know, like, you know, there is really nothing looking good on this chart, right? There is nothing bullish about this chart until it gets down to here, right? It is totally ripe to drop like a stone, and in fact I'm so convinced I might actually try and find a way to go short this little sucker if you can. And just a reminder as far as where that long-term trend line comes from, it goes back a long way, okay? And just keep in mind that the last time it was like overbought on the monthly, okay? Boom, boom, 92%. Overbought on the monthly, came back, boom, boom, 83%. Overbought on the monthly, how's it going to go? It's kind of true to form, you know, 80%, 83%, takes it back to 11,000, okay? So we've got, makes sense there from that perspective, makes sense from that perspective, makes sense there, right? Takes it back to where it broke out from here, right? It's kind of just on 11,000. And fits in pretty closely with this long-term trend line. Is it going at 300,000? Some people have said, right, why would it? Honestly, why would it? There's a very good reason for it to go to 11,000. There's no good reason for it to go to 300,000. Not at the moment, anyway. Anyway, look, that's about it. Have a good day trading. As I said, good to see what's going on in the real market, the futures. Okay, ciao.